What's going on out there, good people? It is your boy Look Around with LMD Trading, coming at you again with another quick video. I was just sitting down at my desk to do a monthly review of my trades in Tradervue, or not so much a review of the trades, but a review of the numbers. See what our data was looking like, and figured I'd go ahead, get LMD Productions cranked up and record it, get it posted online just so y'all can kind of see what I did for the month of February. So we'll go ahead and get Tradervue pulled up and see what we were working with this month. Try something a little different this time. I may have a little music playing in the background while I am sitting here, so hopefully it won't be too much of a distraction. I'll try to keep it down a little low, just something smooth to work with. But let's see, not going to go to dashboard. We're going to go to reports. And let's see, I already have it set for the month, so already at the calendar. So we'll take a look at that first. And we see that we had 4 red days this month. So it's not too bad, not too bad. Looking at that. All right, sorry about that. I had to step away for a minute. Now I see my camera is showing, so cool beans. But like I said, I had 4 red days. Looked like we had 3 days that we didn't trade. I think one of those might have been a holiday, but that may have contributed to our numbers not quite being what they were in January. Let's go ahead and look at the details. We see that our total gains for February, $1,132. So not bad, not bad when we consider this really a part-time job. Basically trading 2 to 3 hours a day, maybe. So not bad for a part-time job. Our average daily gains, $60. So not bad. We're over our, oh, I'm sorry. Let me correct that, because that's definitely not. We're trying to get $50 per trade. So I'm thinking we're over our per trade, but no, we want that to be $100 a day as our daily goal. So we were below that. Average daily volume was 13 contracts per day. Average winning trade, this is where I thought that was. So average winning trades 54. So that's about right where we want to be at. Average loser 38. Would like to see this a little lower, but one thing that I have noticed is that if I trade the chart, I might take a larger stop, but that's where the stop should have been at, as opposed to just getting stopped out at a hard $25. So I can't really judge that one now. Like seeing it like this over here, $88 loss, largest loss, that should be a no-no. That's a no-no. But here we'll catch a little slippage, and then sometimes that stop might be just a little bit lower than the $25. So we'll have a little wiggle room there. Total number of trades 60. Our wins to losses 60-40. So that right there is just about where we've been keeping it at the past month. You can make money 60-40. We see that. We made $1,000 this month. Think we made about $3,000 in January with that same 60-40. So if we can get this to a 70-30 ratio, then that just increases our gains. So that's what we're striving towards. Striving towards a 70-30. But again, I'm good with 60-40, because if we increase our risk tolerance if we increase our risk tolerance, which is going to increase our gain per trade. So instead of risking 25 to make 50, let's say that we increase and we go from risking 50 to make 100. So we're still getting our 2 to 1, but we could see we still would have been 60-40, and just by increasing what we risk per trade and what we expect to make per trade, we would have doubled that. Nothing changed. So now instead of 60, now we would have been trading, let's say 120, because we just would buy more contracts. Wouldn't change nothing else. We would buy at the same delta. We'll buy at the same spread, but we'll just double our contracts and trade the exact same way. Same entry into a trade, same stop into a trade. And if we trade 60-40, we just going to double that money just on the basis that we doubled the amount of contracts that we got in. So 60-40 is not bad. We see we can make money with that. Had two scratch trades where we're just flat trades. Max consecutive wins, 7. Max consecutive losses, I'm gonna just jump across, was 4. Largest gain 169. That's good. Average, or not average, but largest loss 88. No, that's a no right there. That should not be that much. So that definitely is something to work on. Average per share gain loss 10. Okay. Average trade gain loss 18. Okay. Standard deviation 54. Our profit factor 2.35. So that's good. That's decent right there. And this may have been better than January's. Average hold time on a win 30 minutes. Average hold time on a loser 23 minutes. So need to shave that down. Need to shave that. Scratch trades 11 minutes. So that's our stats. If we come here, we see that we actually made $1,971 in gains, but we gave back $839 in losing trades. So just shows what we actually made compared to what we actually lost. If we look at our cumulative P&L, we see that we started the month off kind of consolidating, just in a little slow period right here. Let's see, that day there, we dropped our P&L down. We was down $14. Here, we were down $12. And that was on 9th. And then we had a nice little incline. Slight little pullback right there. Another nice incline. Slight little pullback right there. So that's a nice P&L curve there. Cumulative drawdown. This one I still don't totally understand the concept drawdown. I'm not sure. These may be what we lost on those days, I'm assuming. But if you can get in the comment section and let me know exactly how to read this cumulative drawdown chart, I would appreciate it. I may click this little help thing here. It may explain it in there. So I'll take a peek at that. Let's look at our wins versus losses. We had 13 winning days, 4 losing days. So on our winnings, we had 1370. On our losers, 238. Average daily gain, perfect, 105, right where we want to be. Average daily gain loss, 59. Still not bad. I think, yeah, initially when I kind of wrote my trading plan, I said that my 3 losing trades in a day and I'm done. So that's if I lose 75. Technically, it should be if I lose $75, I'm pretty much done. So we're below that, so that's good. Average daily volume 12. Traded more on those losing days, so did a video, over trading can lead to underachieving, somewhat proving it right there. Average per share gain 16. Average on lose $8. Winners to losers 67 to 28. So here we're just about at that 70-30. But then we come over here on losing days and we're at 65 to 35. So kind of just inverted the numbers. Just pretty much straight inverted the numbers. So the average winning trade was 58 on our winning days. It was 32 on our losing days. Average losing trade 33, and an average losing trade on a losing day 44. So again, kind of inverted those. Our losers were bigger than our winners on our losing days. So that speaks volumes. Average hold on a winning trade, almost identical, 30 minutes. Average hold time on a losing trade, which is a little wasn't expected, was 34 minutes on winning days, 7 minutes on a losing day. So we cut it quick on these losing days, but guess those losers was just a bigger amount. Scratch trades 11 minutes. Profit factor 4-to-1. Right there, it's the chart is speaking it. Stats are speaking it. 4-to-1. I'm risking 25. Average daily was 105. That's right where I want to be at. Profit factor here 0.4, because a lot of the profit was ate up in losers. Largest gain 169 compared to 74 on a losing day. Largest loss 68, which is still substantial loss compared to 88. And those are our comps for winners to losers. Won't really pay too much mind with the pie chart and the comparisons there. But what we will do is compare January to February. So let's do that. Let's pull up January and we'll compare it to February. And if you wonder where the intro comes from, you're hearing it again right here. Nice little band out of Milwaukee that made that little production. So, and I just kind of clipped it out of this little track here. But all right, we are comparing January to February. They almost got them in gator colors for some reason. But we see January gains 24.51. February 11.32. So made a little less than half in February. Average daily gain 122. Look at that. Almost half again. Average daily volume 28.13, almost half again. Average per share gain, we made more in February. Average trade gain, again, we made more in February. But look at the total number of trades. We took 153 trades and we only took 60. So we took less trades in February, but the trades made more money. We just didn't take enough. Average winners to losers 61.37, 60 to 36, right there at that 60-40. That seems to be our sweet spot. And again, you can make money. You can make money all day 60-40. You can make money all day. The goal is to get up to around 70-30, improve that batting average. But like I said, we can make money all day 60-40 and just increase our risk and increase our expected profits per trade. So right now our risk level is 25. So we're risking 25 to make 50. But if we just increase that risk level to 50, so now we're risking 50 per trade to make 100 per trade, that will increase our profitability. And the good thing now, using weekly contracts, we can do that because they're about a third of the price of a monthly. So we can get in and out of trades a little quicker, so we can cut our losses, and then we can take more trades if need be. Again, over trading can lead to underachieving. So when I say more trades, that's just taking more contracts per trade. So instead of taking 2 contracts to make that $50 or $100, we could take 4 contracts and it not eat up our cash in the small account. Because one of the things that I have found when trading in this cash account, I have to admit, is on some of those trades that I held a little longer than I should have, and some of them may have been larger stops than I should have, was that I was holding it, hoping, drinking the hopium, hoping that it was gonna turn, because I know once I open and close that trade, I can't touch that money again until the next day. And that's something that in a small account, I guess you can kind of get in trouble with, trying to hold a trade to make it work instead of just taking that stop. So as we grow the account, that does give us more capital to work with, but also by decreasing the amount that we pay per contract, that also helps with capital as well. So let's say for like a SPY contract, instead of spending 600 on the monthly contract, same delta, same spread, we might spend 200 on the weekly contract, same delta, same spread. So we'll spend a third less and we'll still make the same amount off of the trade, or we'll lose the same amount if the trade goes against us, but our initial investment is a third. So really glad that Mr. Cody had brought that to my attention, that I was like, why are you using monthlies when you can make that same amount of money using weeklies? And again, never too old to learn something, never too wise to not accept more wisdom. So that 60-40 is good, but if we can get it to 70-30, that'll cut our losses down. But look here, average winning trade 54-54. Average losing trade 45-38, close. Standard deviation 81-54. Average hold time, these can't really go by, because actually can't go by at all. In January, we did take, I believe, 3 trades that we held overnight. So that's going to skew our average hold times in January. February, we didn't hold anything. So that skewed that. Profit factor, and this is where I mentioned a minute ago, 1.93 compared to 2.35. So our profit factor was higher in February. We just didn't take as many trades. Largest gain, beautiful trade right there, 475. Largest one here, 169. Still not bad. Largest loss, ouch, 270. That's wicked. That's wicked. Largest loss on this side, 88. Wicked, but not as wicked as that right there. And then average MFE does not work with options. I do like this. This is nice when you're trading stocks and you dropping your data in, because it'll tell you what the maximum profit was that you were in that trade. So that trade, you could have been up $100. It comes back and you make 50 on the trade. Well, you had the potential to make 100 because you was up 100. And that's what this tells you with the average maximum. Not sure what the F is, FE, but I just know that's what this tells you, the max that you were up in a trade. But I think that's all we're going to look at. Actually, we can look right here at the cumulative P&L chart real quick, and then we'll go ahead and end this. When I hear my music, then stop. So that's telling me that I should be stopping, I guess. But we see in January, nice smooth uptrend, a little pullback on a day, smooth, and we kind of chopped around, smooth again, and then we pulled back these last 2 days of the month, pulled back. And then we came into February and we kind of continued from where we left off in January, kind of just consolidating. But then we see right here, what's that? The 9th of February, nice breakout, a little small pullback, another little nice sequential uptrend, and then we hit this little pullback right here and finished the month on out, heading back up into what looks like another uptrend. So we'll have to look at March's numbers once we get into March and see where we're at. But I hope y'all enjoyed this quick review of the data. And let's see where we're at in March. I'm curious. So we'll clear that one and we'll just come here to March. Boom, boom. And let's go here to detailed real quick. And so far in the month, we're up 341. Average daily gain, 85. Average winner, a little less than our 50. Average loser, right there where we like to say we like to have it at. Largest gain, 112. Largest loser, $30. Not bad. Let's look at the calendar real quick. 4 green days. Just been 4. Actually, won't even say 4 small ones. Wednesday was a small day, and that was the day I was traveling Wednesday. So I was traveling on Wednesday, traveling on Friday, and trading from New Orleans on Thursday. So not bad at all. Not bad at all. So we will go ahead and wrap this one up. If you hadn't hit that like button, please do. It doesn't cost you a thing. If you haven't subscribed, please hit that sub button and then the notification bell. That way you can be notified whenever I post videos. And you can come on along for this journey in my trading career. One thing about me is my philosophy is if you can do it, I can do it. That's been my philosophy in life for as long as I can remember, since I was a kid. So I think if somebody can make money in the market, I should be able to make money in the market. I do see that what makes you last in the market is holding on to your money. In my margin account, which is my main account, I do take a little more risk in that account, and on those days it can kind of show. So have to be disciplined. And like another video I said, that's one thing that I can admit in life in general I could work on because I need to drink more water. I think I done drunk 2 bottles of water a day, so I need to get more discipline on that. This right here, this candy kills me. I'm a candy junkie, so I got to work on that as well. But go ahead, wrap this one up, and we will see you again on the next video. Peace. Oh, one other thing. Yeah, support my you got 2 choices: become a boss or work for one. So go on ahead and become a boss. Become a boss. You can still have a boss. I still have a boss. I still have a supervisor in my regular job, but I own an embroidery business. I'm the boss. Stock trading. I'm the boss. Trading is a business. So you need to treat it as a business. That's where Tradervue comes in. You can look at your numbers. Look at your P&L. Like with any business, you can't make improvements in your business if you don't know your bottom line. So treat it like a business, and it will treat you like a boss, and it'll pay you. So again, peace.